So you're looking for a crowdfunded real estate investing platform. You've heard about EquityMultiple, you've heard about Fundrise, and you've got some questions. Well, in this video, I'll be diving into how these two platforms stack up against each other, which one is better from both a price and quality standpoint, and what you absolutely must know before deciding to use either of these platforms. And if at any point during the video you want to sign up for either of these, I've got an exclusive link in the description below for EquityMultiple, where you can get a 1% return boost. And there's also a link for Fundrise down there that helps to support the channel as well. So let's dive in and start with what EquityMultiple is. Well, essentially they were founded in 2015 with the mission of making commercial real estate investments easy, accessible, and transparent. This historically is an area that has not really been any of those things, so they set out on this goal to make it more accessible for the everyday investor. In general, this asset class has low correlation to stocks and bonds. It's got lower volatility than stocks and public REITs, and they're able to target some really strong risk-adjusted returns. Now, in essence, they are a commercial real estate investment and technology company all in one. Through their platform, they provide investors with access to professionally managed private real estate transactions, and their team's got decades of experience in the world of commercial real estate so they can protect you and optimize your return. They handle the deal sourcing, underwriting, and logistics, so you can invest in as little as a couple minutes. They currently have over 48,000 investors across the United States, and they're extremely investor first, meaning that your needs are highly prioritized. As of January 2024, EquityMultiple has closed over 280 real estate investments. Through those, EquityMultiple investors have participated in projects totaling over $5.2 billion in total capitalization, and over $425 million have been paid out to EquityMultiple investors. Now, in terms of where EquityMultiple shines, there are a few key factors to be aware of. First of which is the different investment offerings available on the platform. They offer 3 different buckets of investments you can choose from, which are going to be short-term, income-focused, and long-term growth. When it comes to the short-term investments, these are called Keep, and specifically their product here is called the Alpine Note. This is going to be a yield-focused cash management tool, which you can use to keep your funds on the sidelines, earning for you without tying them up for a long time. This means shorter hold periods and higher levels of liquidity. It's pretty cool how this investment works too on the back end, because essentially EquityMultiple is using this as a line of credit to help out with their other investments. So you're lending them money, they're paying you a yield, which is going to vary based on the time horizon you choose. Currently, they have 3-month, 6-month, and 9-month time horizons, which are going to offer APYs currently of 6%, 7.05%, and 7.4% respectively. If you decide to invest in the Alpine Note and then later want to invest in one of EquityMultiple's other offerings, they make it very easy for you to potentially redeem your investment early for that purpose. And a really big selling point here is that there are no fees on this particular investment vehicle. They've also got a very strong track record here with over 50 series of notes and over $160 million in participation. Throughout that, they've met all of their payment and funding obligations with no missed or late payments. And for all of these reasons, this is the most popular offering on EquityMultiple. On top of that, they also offer first loss protection, which essentially means that whenever they launch a new series of notes, EquityMultiple purchases a small portion of that series. And in the case of a default or missed payment, EquityMultiple's notes are not going to be paid until everyone else has received their principal and interest payments. Now, the next bucket that is more income focused is called Earn. This is going to focus on commercial real estate investments with consistent income potential. You're going to see varying asset classes here, from car washes to multifamily complexes to funds, and the list kind of goes on and on. Generally though, you're going to find cash flowing assets where EquityMultiple sees opportunities for consistency. Current rate projections range anywhere from 8 to 15% depending on the project, and time horizons are going to be in general anywhere from 1 to 3 years, but you'll have to check their website for full details. Then on the long-term growth side, you're going to be looking at Grow. Again, you'll see varying asset classes here, from industrial to multifamily, hotel, etc. Typically, you're going to be looking at either new builds or significant value add opportunities opportunities with potential for very sizable IRRs. These are going to target higher returns than earn, but in general are going to come with higher levels of risk as well. Similarly, they'll also have longer hold periods than earn in most cases. The next strong piece about Equity Multiple is that you get to select the individual investment opportunities you want to participate in. So while there are some funds available on Equity Multiple, most of the investments are individual projects. So you can look at the thesis, you can look at the opportunities, the risk factors, etc., and figure out which one's going to best align with your needs. You're also going to generally see higher IRR targets for projects here. You're going to get access to some fee-free investments like the Alpine Note, and as it's reserved for more sophisticated investors, typically you're going to get higher touch customer support as well. So now that you've got a grasp on Equity Multiple, let's dive into Fundrise so you can clearly understand the differences and figure out which one is going to be best for you. Similarly to Equity Multiple, Fundrise is a real estate investment and tech company that was founded with the mission of making investing in real estate more accessible to the everyday person. In general, Fundrise is going to tailor themselves a lot more towards the average Joe investor, whereas Equity Multiple is going to be for a little bit more of a sophisticated investor. Because of their broader scope, Fundrise is currently the largest direct-to-consumer private markets manager with the help of their proprietary software. They've spent the last decade creating some of the most intricate tech in the entire industry, which has made them a market leader. They're also one of the 50 largest real estate private equity investors in the world by total annual deployment. In both 2021 and 2022, they deployed over $1 billion of capital throughout a portfolio that is composed of over 20,000 well-located residential units and e-commerce centric industrial assets. Compared to the over 48,000 investors on Equity Multiple, Fundrise has over 2.1 million active investors. Their investment portfolio is currently over $7 billion, which is primarily made up of multifamily units, of which they have just shy of 9,000 across 10 different US markets. They also have some industrial exposure with over 2.3 million square feet for lease. They've also got just shy of 3,500 single-family units available for rent as well across 30 different US markets. Across the portfolio, though, they're pretty diversified across fixed income, value add, safer plays, and riskier opportunistic bets as well. Then in addition to the crowdfunded real estate piece, they've got two other arms of their business as well that investors can choose to take advantage of. The first of which is going to be their venture studio, where they invest in a variety of mid to late stage companies across sectors like modern data infrastructure, fintech, machine learning, AI, etc. Their mission here is basically to solve the same uneven playing field issue that they found in real estate, except in the venture capital market. Typically, your average investor is not going to have access to companies before they end up on the stock market, and so that's where this venture portfolio comes into play. They've currently raised over $110 million from 35,000 active investors and have invested in a variety of household names like Canva, Uber, and Match. The other line of their business is a private credit arm where they lend money to borrowers at a fixed rate of return, which is again another way to allow access into a previously gate-kept asset. So in terms of where Fundrise shines, generally they're going to be a very easy platform for complete beginners to get started with. The interface is very straightforward, the onboarding is very easy, there's a very low $10 minimum investment to get started, and all in all, it's just really built for somebody who doesn't know very much about the world of real estate. You're also going to be able to select your strategy versus picking individual investments. So you kind of just tell Fundrise, hey, here's generally what I'm going for. I'm looking for income, I'm looking for short-term, long-term, riskier bets, etc. And then they're going to basically give you access to those investments as an aggregate, rather than saying, I want to invest in, this particular car wash with Equity Multiple. The fee structure with Fundrise is going to be a lot simpler. It's a flat 1% on all investments, whereas with Equity Multiple, you're looking at a fee structure that can range anywhere from 0% all the way up to, potentially 1.5% on the high end. Fundrise also does support very easy IRA investing and investing through a wealth manager, whereas with Equity Multiple, it can be a little bit more difficult to achieve these functions. Fundrise is also going to generally provide you with a greater level of liquidity. As they have more investors, it's a little bit easier for them to help you get out of an investment early, and they have quarterly repurchase options that allow you to do that. With Equity Multiple, on the other hand, the Alpine Note does have monthly liquidity, so that's an easy one as well. But in general, both platforms are really going to be better for investors with longer time horizons. Additionally, with that wider variety of asset classes that Fundrise offers, this can be a selling point for some investors that want to diversify not just into real estate, but also into startups as well. Now, in terms of drawing a conclusion, who's going to come out ahead here? Well, in general, Fundrise is going to be better for your beginner investors that only have a little bit of money to invest. They don't require you to be an accredited investor. Their minimum is as low as $10, and it's going to be good if you have a small portfolio that you want to add just a little bit of diversification to. EquityMultiple, on the other hand, is going to be best for a more affluent crowd that wants access to more exclusive investments. With their thorough due diligence, where fewer than 5% of properties are listed, higher IRRs and greater upside potential, and more control over what you're investing in, generally this platform is going to be more applicable to the accredited investors who can afford to make more significant investments. Now, if you do want to sign up for either EquityMultiple or Fundrise, you can use the links in the description below for the best available offers. Currently, EquityMultiple is offering a 1% return boost for all viewers of the channel. Let me know what you think about both of these guys in the comments below. Thanks so much for watching, and I'll see you in the next video.